is run by a bunch of investment bankers, and Morningstar's modus operandi.
Hello, I'm Fernando Luque, editor for Morningstar in Spain, and I'm joined today by two managers from NATIXIS Global Asset Management. I have Frank Nicolas. Frank is the head of investment and client solutions division. Thank you for being here, Frank.
Thank you.
And I'm also with Philippe Berthelot. Philippe is the head of credit investment team. So thank you for being here, Philippe.
Good morning, thank you.
Let's begin with you, Frank. One of the concepts developed by NATIXIS Global Asset Management is the concept of durable portfolios. What does that mean? What are the advantages of this new way of constructing portfolios?
Well, it means that you have to organize your portfolio in a sense that it will resist to market stress. This is not really a formality. It's very difficult because we know that we face from time to time some distress situation from the market, but if you organize your portfolio in a way to resist to market crash, for example, at the end of the day, after a long time, you will probably benefit from a better return and a better resistance of your portfolio. So the idea is to design an all-weather portfolio, I would say, that resists to market situations.
Okay, but does that mean that the traditional 60-40 portfolio, I mean 60% equity, 40% fixed income is no longer valid?
Yes, because first of all, you have to exit a little bit from traditional asset classes. Of course, you can rely on these asset classes for the core portfolio, the core part of the portfolio, but you have to add some other asset classes as well, and you have to more dynamically run this allocation, because to maintain a constant mix around 60-40 is not really robust and is not really appropriate according to market situation.
Okay, let's talk, Philippe, about fixed income, which is really, well, a difficult asset class to manage in the current environment. I mean, for that particular investor, how can he or she apply this concept of durable portfolio for his or her fixed income part of the portfolio?
In our eyes, DPC means a robust and repeatable and disciplined process of investment. It means gauging and knowing exactly where your risks are. It means diversification. For credit portfolio, for instance, diversification is key. Diversification in a large number of issuers, in a large number of sectors. We do use the tracking error or the VAR risk measure every time we want to do some active strategic allocation between two different sectors or bonds. We do look at the tracking error. How much does it cost? How much is it changed by active strategies? This is a way we do apply the durable portfolio construction to our fixed income portfolios.
So it means to be diversified but also flexible?
It means flexible, especially in a rising rate environment. We have several tools, derivatives and cash solution for that, but definitely we have solution in this particularly tough and complex environment.
Yeah. And in this environment, do you think that for long-term investor, increasing the equity exposure and reducing the fixed income exposure is a good approach?
I'm going to be straight with that. You know, it's always tricky to ask a fixed income investor what he thinks about equities. We have solutions in this rising rate environment. We have, the capabilities of being flexible about rate sensitivities, duration. We prefer to have, short-term credit portfolios currently in this environment. They are much less rate sensitive than traditional government bond portfolios. High yield is much less rate sensitive. Being able to blend, different animals, high yield, covered bond, agencies, investment grade is or maybe a solution in the staff environment, but I prefer to let the gentleman speak and give you some answers, because it does allocate between fixed income and equities, if you don't mind.
Yeah. And one specific recommendation for the investor, one of the funds included in the NATIXIS Global Asset Management funds?
We have two funds fitting this environment, a short duration, little duration, short term. It's called NATIXIS Crédit Euro 1-3, and a very impressive track record on NATIXIS Euro Income Fund, which is first decile in its peer group and will reach a 3-year track record in a 2 months' time.
Okay, well, Philippe, thank you very much. Frank, thank you very much for your views on the concept of durable portfolio. Thank you very much.
Thank you.
Thank you.
Thank you.
Is run by investment bankers, and Morningstar's modus operandi.